Good morning, everybody. Hey, welcome to Tuesday, January 26th, as we head into and move through this last week of January 2021. So, hey, as we get started, yesterday was kind of a mixed day. We'll talk about that coming up next when we get Dave on the line here. It's good to have him back yesterday. And then just a reminder, folks, the one thing that folks can control within their own portfolio is the amount of risk that they have. And the problem is that I've seen with all the folks that I sit down with is that they don't realize how much risk they have in their portfolio. And when they do see it, it's very concerning. So let's schedule your financial x-ray. What does it hurt, right? To get a second set of eyes to see how much risk you have in your current portfolio. Give us a call, 863-382-0037. And I look forward to seeing each and every one of you real soon as we get ready to talk to Dave here in just a moment.
5.7 Light FM. Michael Jackson's there. Morning Dave is here. We're at 8:38 now. It's 22 before 9. Time to find out what's going on with your money and see how your IRA and your 401k are treating you this morning. Let's go downtown to the offices of Statler Financial Services. Phillip Statler standing by this morning. Phillip, good morning. It's the beginning of the real flood of earnings reports today, isn't it?
It is. It is the flood. And hey, we've got we do have some this morning before the market opens up, but really this afternoon, I think we got Microsoft, AMD comes out. So we've got some bigger names this week. I think Apple reports not today, but Wednesday or Thursday this week. And then the big macro thing is GDP for the fourth quarter. So that's kind of the big macro deal.
That's out for tomorrow, isn't it?
It's actually Thursday.
Okay, I knew it was later on this week. I was scanning for it. This is kind of a slow day as far as macro information out of the government. Setting the table this morning, it was a minor off day on Wall Street yesterday. Dow was off by 37. S&P was off by 13. NASDAQ took a little bit of a hit yesterday, down by about 92. But it was, relative to the kind of swings that we've seen over the last 6, 8, 10 months. It was a reasonably quiet day on Wall Street yesterday, albeit to the wrong side of the zero line. A lot of excitement going on off of earnings season after kind of a spotty set of financials to give us the canaries in the coal mine. I've been reading over that Apple hit a new all-time high yesterday. Everybody's expecting this iPhone 12 and iWatch update thing to be an absolute super cycle beginning for Apple, and they're expected to set some new records. And there's some optimism on the other sides, too, aren't there?
Yeah, there are, but let me make one correction for you there, Dave. You said the NASDAQ lost 92. It actually made 92. It was up almost 93 points yesterday.
I got a new format, and I'm looking through bifocals. I knew I had a couple of losses, and that looked like a minus to me.
No, the Dow was down. The NASDAQ and S&P were up. So,
okay.
Yeah, I wanted to correct you on that because that's a pretty big swing there for folks.
Yeah, that really is. A negative to positive. NASDAQ actually had a good day. I'm going to get rid of my trifocals for tomorrow morning.
Yeah, well, and you're right. The slew of earnings really does start coming out this week. And so we do have a lot of stuff, again, coming out, as well as, I think Thursday is probably a pretty big day. Not do we just have the first time GDP number coming out, but then we have unemployment claims and just a slew of other stuff that comes out on Thursday. So, and this is the last full week of January 2021. And it's hard for me to say this, Dave. January is gone. It's just gone.
Just about over. Last trading day of the month is this Friday. It's amazing. One of the things that I'm seeing on my news ticker coming over, and we were giggling about that a little bit before we went on the phone, that whole GameStop saga where a whole bunch of people ended up shorting the stock and then ended up having to cover short sales, meaning their stock just absolutely skyrocketed. It's kind of like the new Bitcoin all of a sudden, and you're actually seeing some people moving from one to the other, right?
I did. I saw a headline that said that folks were moving out of Bitcoin into GameStop, and so it caused me to pull up the chart. And let me just tell you, there's some people that are crying this morning because they lost a bukus of money. this thing opened, right? GameStop opened yesterday at like, I think it was like a dollar. Let's see, it opened on the 25th at like 159.
Mm-hmm.
So if people bought it at 159 and this morning it's trading at 88,
Woo!
they're going to be
Eight.
crying the blues, crying the blues. Yeah. And yesterday, this time when you and I talked, it was 100, right? So, but it closed out yesterday at 76 and some change, up only 18% after being up what, almost 100%. Today it's up 15%, so it's losing a little bit of its luster, but still crazy high.
Really.
Yeah.
And I was flippantly saying, well, you want a good high risk investment that can make a big swing in a single day. You can do Bitcoin or you can do GameStop. But that stock is almost a non sequitur in the grand scope of things. But it's getting to be kind of fun to watch, isn't it?
It is. I saw another headline. You might appreciate this one, but it said that the short sellers
Mm-hmm.
are down $91 billion in January. And obviously GameStop is a big part of that.
Welcome to pessimism not always being a good market decision, right?
Yeah, that's right. That's right. That's right.
Absolutely.
So,
Hey, we got a bunch of household names as far as earning reports, and one of the ones that catch my eye because I'm old enough, I still call it Minnesota Mining and Manufacturing. Nobody even knows what it stands for anymore, but I'm old, so I remember it that way.
that would be 3M, right?
Yeah.
3M. That's yeah. That's hey. That's the just the sticky note people and Scotch tape people, and yeah, we appreciate 3M and some of their innovation. But they had a pretty good quarter day. They beat by 23 cents a share. Revenue was above forecast. Also, they had high demand, especially in their healthcare products. They do a lot of N95 mask stuff, so they benefited significantly in that area. And so they're trading up after closing up 8 tenths yesterday. They're up another 1.4% this morning right now.
Yeah, they
So
were a big supplier of the original flood of masks when we first started the pandemic. I know they supplied them, the N95s and the more compromised, less expensive versions as well. This is kind of a land office time for them.
yeah, that's I mean they got a lot of products, but that one's definitely benefiting from the pandemic. Then we've got American Express reported. They they beat by a little over 44 cents a share. Came in at $1.76. Revenue, nothing spectacular. It matched exactly what they were expecting. Obviously, American Express, they're the banking industry, but like credit cards in general, they're more travel related to a lot of extent. And so they suffered because of the lack of travel and entertainment spending. So that hurt them.
I was wondering why they were down because everything you were saying sounded like good news, but your point taken. They do so much travel-related business that down by over 1% this morning is not a major surprise, is it?
No, it's not. It's not. I mean, they closed down yesterday almost 4%, and then down today 1.75%. So they're taking a little on the chin today.
Ouch. Talking about other big household names, this is one that's about a ghost of its former self. General Electric actually reported, and I'm seeing them toward the right up there in the top of my big winner list this morning pre-market.
They are and there was chatter about them yesterday. Might be in a good play coming out before earnings. I don't have their exact numbers, but what my report does tell me is that they beat and they showed better than expected cash flow. And that cash flow is a big deal for them because they have struggled. They've struggled for, as long as I can remember now, the last 4 or 5 years, it seems like that GE has really struggled. They did, well, I take it back. I do see they came in a penny shy of the 8 cents they were expected to make, but their revenue beat forecast. So they're getting that bump on cash flow. And basically there was another little line in here that said that they seem to be getting it together and knowing what the new GE is going to look like. And so, that's some positive because they really floundered trying to figure out what GE was going to be because they had to sell off so much stuff.
Gosh, Only been in business 120 years. It's about time they found out what they are, right?
Yeah, exactly. So they closed down yesterday 1%, but right now they're up 9%. So
Yeah, I'm starting to
um,
get a trend here. I'm starting to look at the analysts really penalizing companies for missing revenue and rewarding them for making revenue even if they miss the P&L.
well, and I think sometimes that has to do with cash flow and non-cash write-offs too. So that could be like GE. I think that's probably the big thing for them is that, yeah, they missed on earnings, but how much of that earnings is non-cash flow related? Um, and so in this case for GE, they're definitely looking at cash flow. So a good sign for them.
We kind of saw a little bit of that emphasis on sales and revenue on the banking industry as well when we saw them go through at the end of the week.
Well, yeah, we did. We saw some of that there also, where revenue was kind of a little bit of a king there.
Mm-hmm.
We had a couple more earnings come out. We had Johnson and Johnson. They beat by 4 cents of what was expected. Revenue was better than expected. They're working on trying to get their coronavirus vaccine out there. They're up almost 1.5% this morning. Actually, if they continue at the pace they are right now, they would open at a new 52-week high, Dave.
Cool. You'd
And
mentioned
then,
before we went on the air, you mentioned that one of the big cell phone companies also had a report out.
they did. So Verizon, they beat by 4 cents a share. Revenue was ahead of forecast. Also, they did see a smaller than expected increase though in the number of new paying phone subscribers. And so maybe that subscriber number is probably hurting them a little bit this morning because they're trading down 1.5%.
I was wondering why they were off. I was kind of betting we might have a revenue shortfall, but the metric in subscription services like cell phones is subscribers, right?
Yep, it is. And then the last one I have for you is in the uh, recreation area, and that's Polaris. They got the four runners, and they got the boats, and they've got all kinds of stuff, side by sides, and so they they beat by 44 cents a share, came in at $3.34. Revenue also came in above the forecast. Their retail sales, get this, Dave, up 28% year over year. Yeah, a nice little number there. I didn't realize they did motorcycles though. Motorcycles and RVs, it says in my little thing here. I knew boats and snowmobiles and 4x4s, but yep.
They own they own one of the smaller labels in motorcycles. I can't remember which one it is, but Polaris is a much bigger company than we give it credit for. You think snowmobiles primarily, but no, they invented the ATV and they got a whole bunch of all the other products that they sell.
So they also came out and gave better than expected earnings guidance for 2021. They closed up yesterday, almost 0.7%. Today they're getting a nice bump, up 5.7%, and if they open right now, they would be a new 52-week high.
We'll take that happily. Resetting the table for the morning. I've got my magnifier on the screen now so I can actually make it out. Dow was off by a bit. S&P and NASDAQ were both up yesterday, 45 minutes before we opened this morning. Phillip, what are we looking at?
So we I was about to say we had a mixed bag, but the mixed bag just changed to all green. You like that? So we have the Dow up almost 1/4%. The S&P 500 is up a little over 0.1%. And the NASDAQ is flat even right now. Not green, not red. So, and then we look at the commodity side of the coin. We've got silver up 0.5%, gold up a tad over 0.1%. Crude oil is heading back up. It's up 0.5% to $53.05 a barrel, Dave.
New. Well, we're getting closer into the range. I was kind of reacting to even corn is up by the better part of a 2% range today. That's where the Bitcoin money is really going.
You think so, huh?
Corn futures. World markets, Asia was off by a bit this morning. Actually, the Hong Kong markets had a 2.5% drop at the close at 6 a.m., so they did not have a good week. The European markets generally up, at least modestly, most of the way through their day today. Phillip, it's one of the times where during earnings season, things can make wild swings by sector. Time to find out how much risk there is in a retirement portfolio, because you want some, but you want to know where it is. How do I find you to figure that out?
You're right, Dave. Risk is very important, especially folks that are like 10 years out from retirement or who have already retired. And so to get your risk analysis, just give us a call at 863-382-0037. It's a great time too at the first of the year to get a second set of eyes to look at your portfolio to make sure that the risk lines up with your risk tolerance number. And then check out our website, statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here again tomorrow morning on Light FM. Phillip, thank you so much. We'll catch you then, all right?
All right, buddy, you have a great day, and I'll talk to you in the morning.
Thank you much. 105.7 Light FM and Statler Financial Services, Phillip Statler.